Whenever you click that Buy Now button, have you ever really thought about what happens next? Your order starts this massive, super complex journey. It's not magic, right? It doesn't just poof onto your doorstep. Nope. It travels through this hidden world of logistics, and a huge, huge part of that world is owned by one single company you've probably never even heard of. So today, let's pull back the curtain on Prologis.
Just look at this place. This isn't just some big building, it's basically the nerve center of all e-commerce. It's a massive logistics facility. And before that package gets to your house, it waits in a place exactly like this one. And odds are, there's a really good chance that building is owned by a company that is quietly, invisibly powering your entire online shopping habit.
And that company, of course, is Prologis. They are, and this is no exaggeration, the world's warehouse landlord. They're providing the essential physical backbone for our totally digital economy. It's the invisible infrastructure that makes modern global trade even possible.
Now, hey, don't just take my word for it. This is exactly how Prologis describes itself. And you gotta pay attention to those key phrases: high barrier and high growth. See, this isn't just about owning a ton of buildings. Their whole strategy is to dominate the most critical, hard-to-get-into markets, where the demand for fast shipping is through the roof. It is all about being in the exact right place at the exact right time.
Okay, so it's one thing for me to say they're big, but it's a whole other thing to really wrap your head around the scale we're talking about here. So let's try and put their empire into perspective.
So this map gives you a pretty good sense of their global footprint, right? You've got the Americas, Europe, Asia. They've built this incredible network that follows the main arteries of global commerce. But you know what? A map doesn't tell the whole story. Let's put some hard numbers to that footprint, and believe me, they are staggering.
Okay, you ready for this? 1.3 billion square feet. Just let that sink in for a second. It's an amount of space that's almost impossible to even picture. This, right here, is the physical footprint of modern e-commerce. And all that space is spread out across nearly 6,000 buildings. And every single one of them is a critical node in the global supply chain, a humming hub where goods get sorted, stored, and then sent on their way to you. And they do all of this across 20 different countries. They are strategically positioned to serve about 6,500 different customers. I'm talking everyone from the biggest global brands you can think of, all the way down to local businesses in your city. Now, here's where it gets really interesting. Where does all their money actually come from? Well, as you can see, even with that huge global presence we just saw, their financial engine is overwhelmingly powered by the United States. It accounts for a massive 84% of their net operating income, or NOI, which is basically the profit they make from their properties.
So how in the world does a company this huge actually make its money? Well, the model is actually pretty straightforward. It's built on 3 core engines. Let's break them down.
All right, first up is operations. This is their bread and butter. This is them leasing out that 1.3 billion square feet of space, and it generates almost $7 billion a year. Next, they're not just landlords, they're also builders. Their development arm creates brand new facilities, which adds over $700 million in value. And third, they have a strategic capital business. That's where they manage investments for partners, and they earn hundreds of millions in fees for doing it. It's a really powerful, self-reinforcing model.
Okay, so that's the business model in theory. But how is the business actually doing? Let's dive into the latest numbers and see how they performed in the first quarter of 2026.
So, the big question is, was it a good start to the year for the world's biggest landlord? Well, let's find out.
And the short answer is, yeah, their top-line growth was really strong. Total revenues climbed from about $2.1 billion in the first quarter of last year to almost $2.3 billion this year. That is a very, very solid increase.
All right, before we look at their profit, we need a quick definition, a little bit of industry lingo. In the world of these massive real estate companies, you're going to hear the term core FFO a lot. All you need to know is this. Just think of it as their version of profit. It's really the key metric for understanding how healthy their core business is.
And with that in mind, check this out. Their core FFO, that key profit number, also saw really healthy growth. It rose from over $1.3 billion to $1.44 billion. And what this shows is that the revenue growth we just saw is actually translating into real core profitability. That's what you want to see.
And hey, if you just want one simple, powerful number that investors absolutely love, here it is. Diluted earnings per share jumped from just 63 cents to $1.05. Wow,
That is a significant leap and a very, very strong signal of financial health.
So, performance has been strong, no doubt about it. But what about the future? See, because of its unique position, Prologis has its own proprietary data that can act as a leading indicator for the entire logistics market. It's kind of like getting an inside peek at the tea leaves of global trade. So let's see what they're telling us.
Okay, on the left here, we have lease proposals, which is basically a measure of how much new space customers are asking for. And then on the right, we've got space utilization, which is how packed their existing warehouses are. So you can see that the demand for new space is kind of calming down from the, frantic highs of the past couple years. But utilization, that's still incredibly strong, way above historical averages. So what this suggests is the market is healthy, it's stable, it's just not growing at that explosive rate it was before. So how does all that translate into their own forecast for the full year? Well, they're expecting average occupancy to stay really high, between 95 and almost 96%. They're guiding for a continued strong core FFO per share, and they plan to kick off somewhere between $3.5 and $4.5 billion in new development projects.
So what's the bottom line here? It's this. The company is signaling confidence. They see a stable, healthy market ahead, with continued demand for their properties and continued growth in their business.
Which really just leaves us with one final question to think about. In a world that demands everything be delivered faster and more efficiently than ever before, who really holds the keys? Who holds the power? It might not be the brands you buy from, but the invisible landlords who own the physical space where it all happens. So the next time you click Buy Now, maybe you'll remember Prologis, the company holding the keys to the entire global supply chain.